Yes, friends. Now let us move on to your amendments in small dealers. Basically, we are talking about your exemption scheme and your composition scheme. Now, first, when you talk about your special exemption scheme, where you are talking about the limit of 40 lakhs, Section 23, read along with your notification number 10/2019 CT. So there's an amendment, and the same exact amendment is there in your composition scheme, where you're talking about your section 10 of CGST Act. Basically, if you see, there are certain list of goods where you cannot opt for your 40 lakhs exemption threshold limit from registration, and there are again some notified goods where you cannot go for your normal composition scheme, which is 150 lakhs, 75 lakhs. Now, what are they then? Along with, there was already a list of items which was talking about building materials, specifically the item there in HSN number 6815, which was talking about fly ash bricks or fly ash aggregate with 90% or more fly ash content, fly ash blocks. On that particular item, there are certain notified building materials. If at all you are supplying them, you cannot go for your 40 lakhs limit. Now, out of those certain notified building materials, HSN 6815, the wordings have been replaced. Now it is fly ash bricks, fly ash aggregate, and fly ash blocks. The point where fly ash aggregate should contain more than 90% of fly ash content is no more there. So, simple language: fly ash bricks, fly ash aggregate, and fly ash blocks. The same thing is there in your normal composition scheme, 150 lakhs or 75 lakhs. The difference is when you're talking about your exemption scheme, if you are supplying them, whether you are a manufacturer or a trader, you cannot go for 40 lakhs limit. Whereas in your composition scheme, the focus is not on supply, the focus is on the term manufacture. If you are manufacturing them, here what is covered is only and only manufacturer. If you are manufacturing an item which is covered under your notified items, notified building materials, HSN being 6815, again that particular item terms have been replaced. It is fly ash bricks, it was there previously, now also it is there. Fly ash blocks, it was there previously, now also it is there. What has happened is, now it is only merely fly ash aggregate. The point of more than or equal to 90% of fly ash content is no more relevant. Right, so put in a simple terms, one of the notified building materials which was there under your special exemption scheme, 40 lakhs, if at all you are supplying them, you cannot go for 40 lakhs. And they are under normal composition scheme, where you are talking about section 10, where if you are manufacturing it, not supplying, if you are manufacturing it, you cannot go for normal composition scheme, 150 lakhs, 75 lakhs. That particular item has been replaced with more clear wordings of HSN 6815. That is heading 6815. Now, moving on to the amendments in your input tax credit. Yes, there are a lot of amendments when you talk about your input tax credit. Certain important amendments have also come in, and you'll find that a few amendments in your input tax credit and return filing chapter are merely correction because of the amendments elsewhere. So we'll be seeing them as well. Now, when you're talking about input tax credit, first we are going to see the amendment which has come out in your section 16. Section 16 of your CGST Act. Now, section 16 is a basic section which talks about conditions for claiming input tax credit. Now, one of the point was, in one of the conditions they have added, there are already a lot of conditions for taking input tax credit. To put in total terms, after the amendments, the total number of conditions for taking input tax credit is 12. Previously, there were 11, now it is 12. Now, what is the other condition, new condition that has been added? Let us see that. If you see the basic provision of section 16 subsection 2, it starts with notwithstanding anything contained in this section, no registered person shall be entitled to credit of input tax unless you are not allowed to have input tax credit unless What is given here? Unless the details of input tax credit in respect of the said supply communicated to such registered supply is not been restricted under section 38. You will get the details of your input tax credit and your GSTR 2B 2A. So that should not be restricted. If you want your input tax credit, you have to ensure that whatever credit you are getting in your GSTR 2A 2B, first of all, you should get that credit in your GSTR 2A 2B is one of the criteria. Now, whatever you are getting that in your GSTR 2A 2B under section 38, it should not be restricted. It should not be restricted. Please understand these are two different things. Supposing I am the recipient, I am purchasing from you. First is you should have supply. You should have furnished that information in your GSTR1 or information furnishing facility, that is IFF, and only then I'll get it in my GSTR2B. So first condition is you should have filed your GSTR1 or IFF, and I should have got it in my GSTR2B. That is the first criteria. I should satisfy that. Now, in addition to that, I should ensure that that credit has not been restricted. That credit has not been restricted. So that I need to ensure. And in one of the condition of input tax credit, there was reference to your section 43A. Now, wherever in the entire GST law, there was a reference to section 43A, that reference is removed because section 43A itself is omitted. If you at all you want to understand the logic is pretty simple. Section 43A, which was talking about restriction to input tax credit, restrictions on input tax, restriction on availing input tax credit. It was there, but it was never notified. So there was something called as section 43A, which was all about restrictions on availing input tax credit. But the fact was it was never ever notified. Now restrictions for input tax credit is given in section 38 itself. Therefore, there is no need of section 43A. Again repeated, section 43A was talking about restriction on input tax credit. But this was never ever notified. This section 43A was never ever notified. Plus, now these restrictions are clearly given in section 38. Therefore, there is no need of section 43A. Section 43A has been omitted. The moment I tell section 43A has been omitted, you need to understand that wherever there are other sections which are talking about section 43A, the reference to that would be removed. The reference to that would be removed. So basically, you have one extra condition being added. What is that one extra condition which is being added? That extra condition which is being added is for taking the credit. Now it is not sufficient that you should get the credit in your GSTR 2A to B, but also you should ensure that that credit is not restricted under section 38. You should ensure that you should get it under 2A to B, GSTR 2A to B, but also you should ensure that that credit has not been restricted in terms of your section 38. So these are the two amendments that have been brought in. One, you're talking about a new condition being added, and second is mere correction. Whatever the reference, there was a reference to section 43A in section 16 subsection 2 clause C. Now that reference to section 43A is not at all relevant because of a very simple fact that section 43A was never ever notified. Plus, you need to understand that it was talking about restriction on input tax credit. Now, these points are there well within here section 38. Now, before we move on to your other provision which is given below of section 16 subsection 4, we will understand what is section 38, because if you see this first condition, it tells that you should ensure that you are getting that credit in GSTR 2A to B, plus whatever credit you are getting in your GSTR 2A to B, you should ensure that it is not restricted under section 38. So it becomes extremely important for you to understand what is section 38. Basically, the section 38 is belonging to your written filing chapter. We are covering it here. Though it is part of written filing chapter, it has got more relevance to your input tax credit. Now, what does it talks about? It talks about details of inward supplies. It is all about your inward supplies, that is input tax credit. Details of inward supplies, section 38, read along with your rule 60. Now, the old section 38 entirely has been omitted. or replaced, and there is something called as new section 38. There was old section 38 which was talking about something that has been totally taken off, and there's something called as new section 38. Now what is this new section 38 talking about? The details of outward supplies which is furnished by the registered person. So your supplier will file your outward supplies under section 37(1), which is your GSTR1 or IFF, and they are auto generated statement. You'll get the based on the supplier filing his GSTR1 or IFF or such other supplies. Such other supplies here indicates that you are also talking about your GSTR5, GSTR6. So basically, when I talk about the registered person who is filing the outward supplies under section 37(1), my focus is on GSTR1 or invoice furnishing facility. And such other supplies, there may be a non-resident taxable person filing GSTR5, input service distributor filing GSTR6. Right, so the details of outward supplies furnished by the registered person under section 37(1), which is your GSTR1 or invoice furnishing facility for QRMP scheme, and such other supplies which is GSTR5 by non-resident taxable person and GSTR6 input service distributor as may be prescribed. An auto-generated statement containing the details of input tax credit shall be made available to the recipients. So based on the opposite party filing their GSTR1 or IFF or GSTR5 or GSTR6, there will be an auto-generated statement which contains the details of input tax credit which is made available to the recipient within such time, in such form and manner and within such time. Right, but subject to conditions and restrictions as may be prescribed. Now what are the conditions and restrictions that are prescribed? The auto-generated statement which is coming, which is discussed in your section 37(1), whatever you are getting in your auto-generated statement. Now there are certain conditions which are very, very crucial. First, you should be, if at all I am a recipient, I should make sure that my supplier is filing my GSTR, his GSTR1 or IFF or GSTR5 in case of NRDP, GSTR6 in case of input service distributor. Plus, in addition to that, that auto-generated statement which I am getting shall consist of, that will consist of what all? That auto-generated statement will consist of what all? Details of inward supplies, the credit of input tax which may be available. So it will give me the recommendation that these are all the details that your supplier has filed and you have got an auto-generated statement, and this is the portion on which you can take the credit. May be available. They have used it up, may be available, and the details of supplies on which credit cannot be availed. It will give me two lists. Whatever is appearing in my GST at 2A to B, which portion credit may be available, recommendatory, you may take it. Which portion credit shall not be, you cannot take it, mandatory, whether wholly or partly on account of the details of supplied furnished under section 37 subsection 1. Now, on what basis that credit is not been available? By any registered person within such period of taking registration as may be present, which means registered person has taken new registration. His particular supplies, though it is coming in my GST 2A or 2B, I may not be able to take the credit. So it is by a registered person who has filed as GSTR1 or IFF, but he is a newly registered person, or by a registered person who has defaulted in payment of tax and such default continued for such period as may be listed. So basically, first point you are talking about a newly registered person for such period of time as the case may be. Second person, you are talking about a person, supplier, who is not making the payment, for continuous period of such time. They will tell that continuously has not made the payment for 2 months or 3 months, or that needs to be prescribed. So that particular person has not made the payment and the default is continuing for a particular time as may be prescribed. Or you are talking about by a registered person, the output tax payable as per his GSTR1, that is his statement of outward supplies, GSTR1 exceeds output tax actually paid based on a GSTR 3B. So first you're talking about a newly registered person. Supplier is a newly registered person. Second, you are talking about default in payment. He has not made the payment for such time as may be prescribed. Third, you are talking about a scenario where the supplier has shown his sales more in GSTR 1 but actually paid less based on GSTR 3B, because when you talk about GSTR 1 there is no payment. Payment is only at the time of GSTR 3B. So his outward supplies in GSTR 1 is more than outward supplies in GSTR 3B, on the basis of which he has made the payment. Or you are talking about a scenario by such registered person who has prescribed taken the credit that exceeds the credit that can be availed in accordance with clause A, which means in accordance with clause A means the recommendation that system will give. Now you have not taken the credit more than what is recommended. Your supplier has taken credit more than what is recommended. Your supplier has taken the credit. See, your supplier will also get all these auto-generated statement. So your supplier will also get particular credit portion GST 2A to B, which will tell that only this credit you may be availing. But the supplier has taken credit more than what can be availed. More than what can be availed as per your section 38 subsection 2 clause A. Or by such registered person who has defaulted in discharging his tax liability in accordance with section 49 subsection 12. So he has not paid the tax liability correctly. Restrictions in payment. Right, he has made the payment, but he has made the payment entirely by his credit ledger. So here you're talking about what? You're talking about your first ITC is more availed, and here you're talking about a scenario where payment is made but payment is not made properly. Payment is made but payment is not made properly. He should have made payment by credit ledger 99% and 1% by cash, but he has made the payment of entire liability by credit ledger. So that is a scenario. These are all the situations that are coming up. Now if you look at this particular section 38, it is very dangerous. See, as a recipient, I need to take care that my supplies, my credit is there based on my GST 2A to B. The supplier has filed their returns. Now I am also required to see whether they are doing all the works properly. Supposing, let us take a scenario where you are talking about an example. Let us take an example to understand what is the risk or how dangerous your section 38 sounds. So you are talking about me being the recipient and I have a lot of suppliers. If you see, there is supplier 1, supplier 2, supplier 3, 4, 5, 6. I have hundreds of suppliers here. Now out of hundreds of suppliers, I get the details of 90 suppliers in my GSTR, auto-generated GSTR 2A to B. Supplier 1, supplier 2, supplier 3. I get details only of 90 suppliers in my GSTR 2A to B. So I have purchased from lot of suppliers, but what I get in my GSTR 2A to B? What I get in my GSTR 2A to B, GSTR 2A, which is dynamic, keeps on changing, but monthly filing I need not say GSTR 2, I'll be saying GSTR 2B, which is static. I see 90 suppliers. Now previously, understand that what they were trying to tell, from 91st supplier to 100th supplier, the details of which I am not getting in my GSTR 2A to B, I cannot take the credit. So previously the point was pretty simple. If you get in your GSTR 2A to B, you can take the input tax credit. If you don't get in your GSTR 2A 2B, basically GSTR 2B on, because if I'm filing my returns on monthly basis, the GSTR 2B. 2A is to be checked on yearly basis when you're filing your annual return. I cannot take the input tax credit. That was the mere condition. That was a mere condition. Now, additionally, I need to take care of others. Not only I should make sure that my suppliers are. How I'll get that details in my GST 2A to B, because all my suppliers will be filing their returns. All my suppliers will be filing their returns. They will be filing the GSTR 1 or IFF if at all they are under QRFD scheme, invoice furnishing facility. They will be filing their IFF. I'll be getting the details based on that. Also, there are other returns like your GSTR 5 by NRDP or GSTR 6 by IC, which is not so important. This is normal scenario. Special scenario is not so important. We are not talking about special scenarios and all. Our focus is only on the normal scenario. So not only I should make sure that the opposite party has filed their GSTR 1 or IFF, I should also check what they are doing. So I should now check that basically previously points are simple. Out of 100 suppliers, if 90 suppliers have filed their returns GSTR 1 or IFF, I will take the credit, and balance I will not take the credit now. I will postpone the credit. I will not take the credit now. I will take the credit later when it actually comes. I am not going to take the credit now. I will postpone it later. Right. Now, out of those 90 suppliers, I need to check all the other details also. Supposing out of 90 suppliers, supposing my first supplier is a newly registered person. Second supplier has defaulted in making the payment for a particular time as it is prescribed. Third supplier, you're talking about a scenario has taken credit more than what is available, what is recommended, because the GSTR 2A 2B will give you two details. GSTR 2A and 2B will tell that what credit you may avail and what you cannot avail. So it will give you two details. That credit details that ITC may be available. ITC may be available. That is the first details. It will also recommend, it will also give you the list ITC which cannot be availed. Cannot be availed. So my GSTR 2A 2B itself will recommend. So these are all the list where ITC may be available. ITC may be available. Look at the wordings, may. And the second list where I cannot take ITC. Partly or wholly I cannot. That is, when I cannot, they will tell that you should not take it. It is kind of mandatory, but when I can, it will tell it may be available. I need to check it further. Right. So there is one supplier who is a newly registered person. There is another supplier who has defaulted in making the payment for prescribed period as it would be prescribed at a later point of time. My third supplier, you are talking about a scenario where he has filed his the sales in his GSTR 1 is more than the sales and the payment in GSTR 3B. My fourth supplier is a person who has taken more ITC than it is recommended. Not me. My supplier has taken more ITC than it is recommended. My supplier 5 is a person who has made the payment. But improper payment. But that payment is improper. Why that payment is improper? I should have paid say 99% by credit ledger and 1% by cash ledger, but I paid entire 100% by credit ledger. Now look at the irony. These five suppliers, though I am getting in my GSTR 2B, I cannot take the credit. These five suppliers, I am getting it. These are all available in my GSTR 2B, but I cannot take ITC. Say from 5th supplier to 90th supplier, sorry 6th supplier to 19th supplier. I am getting in my GSTR to be. I am getting in my GSTR to be. ITC may be taken. I need to check further whether there is some ineligible portion or not. And the last 10 suppliers which I have not got in my GSTR 2B itself, which I have not got in my GSTR 2B itself, I cannot take the credit. So that is the beauty of section 30. Section previously I should ensure that I have got my purchases in my GSTR 2B when I am taking the credit on monthly basis. I have got in my GSTR 2B. Basically, you need to check GSTR 2B when you are filing your regular returns. Only in annual return year end basis I will check GSTR 2B. So as of now, GSTR 2B. So if I see, if I am categorizing my suppliers, there are about 5 suppliers who have filed their returns. And I am getting in my, I am actually getting in my GSTR 2B. But still I cannot take the ITC. Why? Either that supplier is a person who is registered newly for that particular time as may be prescribed, or he has defaulted in payment for a particular period as may be prescribed, or his sales in GSTR 1, outward supplies in GSTR 1 is more than what is there in GSTR 3B, on the basis of which he is making the payment. I am getting in my GSTR 2B but I cannot take the credit. Or my supplier has taken the ITC more than what is recommended. So when my GSTR 2A 2B will come maybe in near future, I will have a recommendation. This ITC you may avail it, this ITC you cannot avail it. So I am taking ITC more than what is recommended. Who is taking ITC? My supplier is taking ITC. What is more than recommended? It's all done by my supplier. Or my supplier is making improper payments. I cannot take the credit. Now next is a list where I am talking about my other suppliers not covered in those cases who have filed the GSTR 1. I am getting in my GSTR 2B. It is also not restricted. These are all the restrictions. These are all the restrictions as per section 38. Now I have got the credit in my GSTR 2B, plus there is no restriction as per section 38. My suppliers are not covered in those notified cases. I can take the credit. And those of my suppliers where I am not getting, they have not filed their GSTR 1 or IFF on time, I am not getting in my GSTR 2B, I will not be taking the credit now. It is postponed. This credit is being postponed. This particular credit is being postponed. Even the same is true with this particular credit also. It's not that I cannot take it, it is being postponed as of now. Restricted as of now. So that is about your newly drafted section 38. This explanation, whatever is given here, we have taken understood in form of a detailed example. And the reference in section rule 60, section 38 needs to be read along with rule 60. You need not see that amendment, not at all relevant. Previously the wordings used were auto drafted. Now everywhere you will find auto generated. It's not auto drafted anymore, it is auto generated statement. The GSTR 2A 2B which I get is not auto drafted anymore, it is auto generated GSTR 2B. Auto generated. So obviously for exams you may easily skip this. Nothing, not at all important. It's not an exam, this is only a corresponding effect of amendment, not at all relevant for your exams. Now coming back to the other provisions of your section 16 where the conditions have been affected. Now we are talking about the next condition. The one condition that is a new condition is my ITC should not be restricted. I should get the ITC in my GSTR 2B, that was earlier required. Now the amendment is it should not be restricted, which means I should take care of my suppliers also. Being a recipient, I should see my supplier is not a newly registered person. He has not defaulted in making the payment for a particular time. His sales in GSTR 1 should not be more than GSTR 3B 1 which he is making the payment. I should ensure that his payment is not improper. I should also ensure that my suppliers has not taken ITC than more than what is recommended. So the burden is on recipient to see what his supplier is, which is actually, I am not telling it is difficult, it is impossible for the recipient to take care of all these things. I wish and I pray that this particular section 38, which talks about restrictions for taking ITC for the recipient, because supplier is doing something, is pretty draconian, highly dangerous for the recipient when he is taking the input tax credit. Obviously, the provision is there, but there are certain things which are yet to be notified. We pray that this provision or restriction under section 38 is not being implemented and is again taken back. Again, coming back to the another condition which is being amended is, there is a section called as section 16 subsection 4, which talks about the last date for taking credit. Right, this effect is you will be finding in your document chapter, also return filing chapter. What is the last date for taking the credit? Previously, the last date for taking the credit was due date of September return or actual date of annual due date of September return of the succeeding financial year, or actual date of annual return whichever is earlier. Now they have removed that due date of September month return of next financial year, and they have replaced it with 30th day of November of next financial year. 30th day of November of next financial year. Let us try to understand this. What was the last date? Last date for taking your input tax credit. Now, before the amendment, after the amendment. Now, before the amendment, it was due date of September month return of next financial year. September return of next financial year, or actual date of annual return of that particular financial year, of the same financial year, whichever is earlier. Now, after the amendment, it is not due date and all. It is 30th of November of next financial year, or same, the second part remains the same, actual date of annual return of that particular financial year, whichever is earlier. So this area is amended. Previously the focus was on your due date of September of next financial year. Due date of September return of next financial year. Now it is not based on return, it is 30th November of next financial year. Now what is the impact? Let us see the impact. Now, normally due date of September return of next financial year, normally it was 20th of October of next financial. Normally, not always, due date would be normally 20th after the next month. Now if at all I am talking about financial year 2022-23, if I have not taken any credit, supposing you are talking about say December 2022, there is an ITC of December 2022 which I wish to take in September return, which is to be filed on 19th October, or which I wish to take in September return, which is filed on 26th October, which I wish to take in October return, which is filed late on 28th of November. Now, these are the scenarios. I have missed this ITC. This ITC of December month I have missed. Now I am willing to take. These are three different scenarios. Case 1, I am willing to take in September return of next financial year. Supposing September return of next financial year means I'm talking about September 2023. September 2023 return. So everywhere I'm just writing September or October 2020. September 2023 return. September 2023 return. Here it is October 2023 return. Case 1 I'm willing to take in September 2023 return. Case 2 is also I'm willing to take in September 2023 return, and case 3 is I'm willing to take in October 2023 return. Now before the amendment, what was the scenario? Before amendment and after amendment. Supposing I am talking about one more scenario which I am willing to take in October 2023 return filed on 11th December, case 4, so that you understand there is some common point also. Before the amendment, I can take the credit assuming my annual return is filed much later. So I'm going with an assumption. I'm going with an assumption that my annual return is filed on 28th of December 2023. 28th of December, much late. The due date of annual return is 31st of December of next financial year. I am filing on the fag end. So that is the understanding. Now, before the amendment, you need to understand that there is a missed credit of December 2022 which belongs to financial year 22-23. Before the amendment, if I want to take the credit, I have to take the credit in maximum last month is September month return filed before the due date. So in the first case where it is September return and it is filed before the due date which is 20th of October, I was allowed to take the credit. I was allowed to take the credit. The credit was available. But if it is September return, September 2023 return, September of next financial year return, but filed after the due date, I was not allowed to take the credit. And obviously if it is October return filed after the due date, I cannot take the credit. If it is October return filed very late, obviously both the cases are filed after the due date, filed very late, I cannot take the credit. But after the amendment, what they have said, they have not said any in which return. They have said that any return filed before 30th of November of next financial year. Any return. So it need not be specific. They are not very specific. They are not telling that it should be only September. Any return filed which is filed before 30th of November. So now, after the amendment, if I have missed the credit of December 2022 which belongs to financial year 22-23 and I am willing to take the credit in September of next financial year, September 2023, filed on time, that is on or before the due date 20th of October 2023, can I take the credit? Can I take the credit? Yes, I can take the credit. If I am willing to take the credit in September 2023 which is not filed on time, which is filed after the due date, but that filing is before 30th of November of next financial year, can I take the credit? Yes. If now I am willing to, if I have missed the September return, I have not taken the credit in September return, I remember only in October 2023, October of next financial year, which the return of which I am filing late, but it is before 30th of November of next financial year, can I take the credit? Yes. So now, after the amendment, whether it is July return or September, July return or August return or September return or October return, that is not at all relevant. I should have filed those returns on or before 30th of November of next financial year. I should have filed those returns, whether it is April of next financial year or May of next financial year or June of next financial year, July of next financial year, August of next financial year, September of next financial year or October of next financial year. I should have filed those returns on or before 30th of November of next financial year. I can take the credit. But if it is October return which I am filing very late, I am filing in December, even now I cannot take the credit. Even now I cannot take the credit. And this entire scenario, I've assumed that my annual return is filed very late. So that to understand that which was earlier will always be only this. I've just gone with an assumption that my annual return is filed very late, to just explain the effect of the amendment. So that is the impact of amendment with respect to your time limit. Time limit, section 16 subsection 4. In all the provisions you will find that there is an effective date, which is not important for your exams, but nevertheless you will find that every provision below you will find an effective date from which date this provision is being effective. Now there is another condition which is there, which tells that you should have the documents for taking the credit. Now friends, we are not talking about section 16 anymore, we are talking about your rule 36. Rule 36 is the main condition, a main rule for taking the credit. It talks about documents and other conditions for taking your input tax credit. Now the amendments in rule 36 are insignificant, they are not of much use, they will never be tested in your exams because they are all corresponding amendments because of amendment in different places. Now if you see the type of amendment that has come out in rule 36(2), they have said that you can get the credit if you have the document. There was a wording which tells that and the relevant information as contained of the said document is furnished in GSTR 2. Now there is no concept of GSTR 2. So there was, when GST was launched, they thought that recipient will file something called as GSTR 2. The reference of GSTR 2 was never ever required. If you see the note also, you will find that reference of GSTR 2, you are not talking about 2B or 2A, you are talking about GSTR 2 is removed. It was practically never ever there. No one has ever seen something called as GSTR 2. No one has ever filed something called as GSTR 2. You get the auto-generated GSTR 2B or 2A. 2B is static, 2A is dynamic, keeps on changing. You get that. But you never file, recipient never filed something called as GSTR 2. So that reference is removed. And they have said that another condition which talks about rule 36(4), documents for taking ITC. They have just corrected the grammar, right? So if you want to get input tax credit, the details of that input tax credit on such invoice should be communicated to the registered person in GSTR 2B. So it just tells that the supplier should have filed as GSTR 1 or invoice furnishing facility, and as a recipient you should get the details of that input tax credit. Previously the wordings were you should get the details of invoices or debit notes. Now they are telling that you should get the details of input tax credit in relation to such invoices or recipients in your GSTR 2B. So it is only a grammatical correction. From your exam point of view, no, not at all relevant. One place there was a reference of GSTR 2 which was never ever there right from the beginning. That is removed. Other place they have just added wordings. Previously the wordings were supplier should file as GSTR 1 or IFF and you should get it in GSTR 2B. When you get in GSTR 2B, the wordings were the details of invoices or debit notes. Now the wordings are details of input tax credit of such, in respect of such invoices or your debit note. So that is only a grammatical correction. In input tax credit in respect of is being added. So not at all relevant. Now next you are talking about rule 37. One of the conditions for taking input tax credit is given in your rule 37, where it tells that if you are not making the payment to the supplier within a particular time, which is 180 days, you need to reverse your input tax credit. So that particular rule, you will find that there is entire replacement. So there was rule 37 sub rule 1 which tells that if you are not making the payment within 180 days, you need to reverse ITC. You will find the old provision being given, old rule 37 1 being given, which is now replaced by new 37 1. Now what is the impact? Let us see the impact. Now what they are telling, a registered person who has availed input tax credit of any inward supplies of goods or services or both, other than supplies on which tax is payable in the reverse charge mechanism, but he fails to make the payment to the supplier the amount of value of such supply along with the tax within the time specified, that is within 180 days. in section 6 of section subsection 2, he shall pay an amount. Now, what is the impact? He shall pay an amount which is nothing but the amount that of input tax credit that he has taken with interest computed under section 50 while furnishing his GST 3B of tax period immediately following the period of 180 days. So, whenever that 180 days period is crossing and still you are not making the payment, immediately post that if you are filing any GSTR 3B, you need to include that. And this provision is also not applicable where you are talking about schedule 1 cases, because there is no consideration at all. That is also not applicable where you are talking about value of supplies being added. There is an addition amount because your recipient has paid to third party on behalf of the supplier. So see, there are 3 exceptions. It is not applicable for your RCM. It is not applicable for Schedule 1 deemed supply cases. It is not applicable for recipient making the payment to third party on behalf of supplier. They remain the same. There is no change per se. Now you may feel that then what is the change? The welcome change that is there is now interest computation is not given here. Interest computation is taken to your newly amended section 50. That is first thing. Second thing, now they tell that you need to reverse the entire ITC, not proportionate ITC. Whatever ITC you have taken, you have to reverse it. Even if you have not paid small amount, you have to reverse the entire input tax credit with interest. So that is the impact. So you will see 2 impacts. Even if partial payment is not made within 180 days, entire ITC, not only proportionate ITC, full ITC, the value of services 10 lakhs and GST is 1,80,000. I have already, out of 10 lakhs plus 1,80,000, which is 11,80,000, I have already paid 10 lakhs. Only 1,80,000 is pending. But still I need to reverse full ITC and not just proportionate ITC. And secondly, interest now is linked to your section 50. So we'll see what is section 50, how interest is calculated. We'll see that. That is first point. Section rule 37 sub rule 1. Now rule 37 sub rule 2 is also being replaced. What it is trying to tell? It is saying that only and only when that registered person subsequently makes the payment of the value and the tax, full value and the tax, he shall be entitled to re-avail the entire input tax credit. So what are they trying to tell? Even if small payment is not made within 180 days, first fully reverse the entire ITC with interest. And only when you make the entire payment, only and only when you make the full payment, whatever ITC was reversed earlier, we will be re-availing and forget about interest. Interest paid in between was a cost. Interest paid in between was a cost. Now they are very clear. So when you get the invoice, take the credit. When you get the invoice, right, there are multiple scenarios. You pay within 180 days. You pay fully in 180 days. Pay partially in 180 days. Pay partially after 180 days. And or pay fully after 180 days. Now, out of these 3 different scenarios, scenario 1, scenario 2, scenario 3, now the amended rule 37 tells that in the first case, the moment you get your invoice, first you have taken input tax credit. And if you have paid within your 180 days, nothing will happen. If you have paid even partially after 180 days, even that is partial payment after 180 days, you have to reverse ITC with interest. Interest computation is now linked to section 50, so you need to see that. And in the second and third cases, you can re-avail ITC. You can re-avail ITC only on full payment of value plus tax. So what are they trying to tell? Even if there is a partial amount which is paid after 180 days, even if there is partial amount which is to be paid after 180 days, make sure that the moment you cross 180 days, if small portion of the payment is pending, finished, reverse ITC with interest. Interest completion as per section 50, linked to section 50, and you can re-avail the credit, no time limit, after 2 years, after 5 years, re-avail it, only on full payment of value and tax. So things are again very dangerous. They're telling that you are almost paid 90% of the value plus tax, only some 10% spending. Forget about that. You reverse full ITC with interest. Interest calculation as per section 50. So when you pay the balance amount, whenever the full payment is made, then whatever credit was reversed, full credit was yours, you will get re-avail the full ITC, but interest paid in this entire process, interest paid would be a cost. So things are very, very, very dangerous in your newly amended rule 37. Right, this section 38 read along with rule 60, which was a part of written filing chapter we have discussed. Also you are talking about the next provision. This is again a part of written filing chapter, section 41. Section 41 is fully replaced. Old section 41 is gone. You are talking about provisional ITC, new section 41. New section 41, claim of provisional ITC, and final ITC. So that is one of the conditions. Basically section 38 and section 41 are the sections of written filing chapter, but we are discussing in your input tax credit, because section 41 talks about claim of ITC and provisional acceptance thereof. You'll find interesting things. Every registered person shall, subject to the conditions and restrictions whatever is there in your ITC chapter, avail input tax credit. So he shall be eligible for input tax credit after crossing all the conditions and restrictions. Right, he'll take the self-assessed input tax credit in his electronic credit ledger. So first he'll take it, self-assessed, he'll himself assess it. The credit availed by a registered person under section 41 subsection 1 in respect of such goods or supplies, the tax payable whereon has not been paid by the supplier, if the supplier has not made the payment of tax. If the supplier has not made the payment of tax. See, in addition to supplier filing his GSTR 1 or IFF and I getting in my GSTR 2B, I should ensure that supplier has also paid the tax. If supplier has not paid the tax, I will reverse it along with interest. I will reverse it along with interest. And later point of time, if supplier makes the payment of tax, I shall re-avail the credit reversed as may be prescribed. Right. So what again they are trying to tell? This is another condition, that supplier should have paid the tax. One of the condition of input tax credit, that supplier should have paid the tax. Supplier should have filed his GSTR 1 and IFF, and I should have gotten my GSTR 2B is one of the condition. This another condition is supplier should have filed his GSTR 3B and made the payment of tax. So initially they tell that you take input tax credit. Supplier making the payment of tax will be done later. You first take input tax credit. See all the other conditions and restrictions, take input tax credit, avail input tax credit. Later point of time, if any supplier has not made the payment of tax, you need to reverse input tax credit with interest. Again here interest comes. Now please understand that how you will come to know that supplier has not made the payment of tax. This would be ascertained by officer at the time of scrutiny or any other proceedings. This you will not know that supplier has paid the tax or not. This will be ascertained by the proper officer at the time of scrutiny, audit, inspection, etc., etc. And later point of time, if that supplier, you find that supplier has already later point of time paid the tax, you can re-avail the input tax credit. So first they tell that don't worry about supplier. This condition cannot be satisfied real time. So first they tell that you please take the input tax credit. And if proper officer at a later point of time tells that your supplier has not made the payment of tax, you please reverse that with interest. And you later on find with the supplier that he has actually made the payment of tax later, you can re-avail the input tax credit. Interest will be cost, you can re-avail the input tax credit. Right, and the important thing to notice, there is basically no time limit as to when this provisional ITC, the ITC initially which you take is provisional ITC. Final ITC is only when supplier has paid the tax. So there is no time limit. Your supplier may have paid the tax after 4 years. Your provisional ITC that you have taken in the beginning will become final ITC. Right. So initially, please understand that a lot of doubts have come out on this condition a lot of times, even in the old section 41. Should I check that my supplier has paid the tax real time? No. I'll assume that my supplier has paid the tax, I'll take the credit. When at a later point of time, my proper officer tells that your supplier has not made the payment of tax, I need to reverse ITC with interest. But thereafter, if supplier pays the tax again, I can reclaim the input tax credit. Right. Now, there's an amendment in your Rule 43 which deals with proportionate ITC on your capital goods. Proportionate ITC on your capital goods. Whether actually this amendment is there in Rule 43, but it is true for your proportionate ITC on inputs and input services as well as your capital goods, Rule 43. Now, what is that amendment? That is an explanation to Rule 43. Now, what does that explanation 2 tells? It tells not only for the purpose of this rule, but also for Rule 42. Proportionate ITC on your input and input services as well as this rule 43 is proportionate ITC on capital goods. It is hereby clarified that aggregate value of exempt supplies shall exclude. It will exclude. Aggregate value of exempt supplies will exclude, not include, will exclude what? Value of supply of duty credit scrips. Value of supply of duty credit scrips. There is already a list. Along with that list, one more point, D is added, value of supply of duty credit slips. Now, what are they trying to tell? Normally, when you talk about your Rule 42, and your Rule 43, proportionate ITC on your inputs and input services, Rule 42, proportionate ITC on your capital goods. The reversal is based on what? The reversal of ITC. First you will avail full ITC. First you will get full ITC. Then you will reverse ITC. You will reverse a part of ITC. The formula is ITC multiplied by value of exempt supplies divided by adjusted total turnover of that state or union territory. So you basically, the focus is on value of exempt supplies. Reversal will be based on the more you have exempted supplies, the more will be the reversal. Now what they have said, explanation 2 to Rule 43 tells, defines this explanation 2 to Rule 43 defines this value of exempt supplies. Now understand that technically your duty credit scrips, duty credit scrips, say for example your now you don't have MES script, RODTEPs, remission of duties and taxes on exported product, or SCIS script, service export from India scheme. There are a lot of duty credit scripts. It is not having any tax, it is exempted. There is no GST. There is no GST. When there is no GST, it will be basically added in. When there is no GST, it will be basically added in value of exempt supply, and there will be some reversal. Now they tell that no, this duty credit script, though it is actually exempted, you don't include in value of exempt supplies for the reversal. Strictly speaking, technically speaking, it is actually exempt. It is actually exempt, but this portion is not included in your value of exempt supplies. When it is not included in your value of exempt supplies, obviously what would happen is no reversal because of duty credit scripts. There is no reversal because of duty credit scripts. Though I have duty credit scripts which I am selling it at a discounted price which is exempt, technically it is exempt. Whenever something is exempt, I need to reverse something. But I am not going to reverse anything because my value of exempt supplies as per explanation 2 to rule 43 will not include duty credit scripts. Though technically it is exempt. But it will not be included in my value of exempt supplies. When I don't include it in value of exempt supplies, because of this there won't be any reversal. I repeat, technically duty credit scripts when I sell it is exempt. So my normal product, so I have 100 crores turnover. I have 100 crores turnover on which I am paying GST. I have duty credit scripts say only 50 lakhs on which I am not paying GST. So this is a normal goods or services, and this is duty credit script. Now technically it is exempt, so I will not, because of this I will not have rule 42 or rule 43 reversal. Though I have some exempt, when I tell I am not going to pay GST, though I have some exempt supply, my duty credit script is technically exempt supply, but there won't be any rule 42 43 reversal because of this exempt supply, because this is not included in value of exempt supplies. So that is the amendment which is there. And other points you need not even focus on is there are other places where you find amendments. Forget about this entire places, because you will find that there is an amendment in your rule 38 where you are talking about proportionate credit by banks and financial institutions. Rule 42 pro rata credit on inputs and input services. Rule 43 pro rata credit on capital goods, proportionate credit. In all these places there is a reference to section, there is a reference to GSTR 2. Just a few moments back I said that GSTR 2 was never ever practically effective right from the beginning of GST. No one has ever seen how a GSTR 2 works because it never came out. So wherever there was a reference to GSTR 2, wherever you had this reference to GSTR 2, that reference to GSTR 2 is now omitted in all these places. So from exam point of view, no, it is not at all important. It is only an impact of amendment because of other amendments. There is a corollary amendment which has come out here. Now we are talking about your next chapter, documents, where you have certain amendments. Now in document chapter, basically the important amendment that has come out is the limit of invoicing being reduced from 20 crores to 10 crores. So when you are talking about e-invoicing, then we'll see the other amendments. Rule 48 sub rule 4. E-invoicing basically previously was applicable if your aggregate turnover in any of the preceding financial year, right starting from 17-18 till now, exceeds, previously the limit was 20 crores, now the limit is 10 crores. They have reduced the limit. From 20 crores they have brought it down to 10 crores. So if at all in any of the preceding financial year, any right from starting from 17-18, if in 17-18 or 18-19 or 19-20 or 20-21 or in 21-22, any of the preceding financial year, right starting from 17-18, if my turnover is more than 10 crores, then in the current financial year, that is say 22-23, e-invoicing will be applicable. So if you are standing in financial year 2022-23, I have to see all the other financial year, right starting from financial year 17-18 or financial year 18-19, or you are talking about financial year 19-20 or financial year 20-21 or financial year 21-22. If in any of these preceding financial year, everywhere the wording is or, if in any of these preceding financial years. If I tell that pan India aggregate turnover is more than 10 crores, is more than 10 crores. Previously it was 20 crores, now it is more than 10 crores. Aggregate turnover is more than 10 crores is in 1718 or in 1819 or in 1920 or in 2021 or in 2122, then e-invoicing is applicable. If this is this, then e-invoicing will be applicable in that current financial year, which is say in our example 22-23. So that is the amendment that have been brought in. Now the other amendment again, which is related to e-invoice, which is given in Rule 46. Rule 46, so which is again related to e-invoicing. See this point, that is all again related to your e-invoicing. So what a tax invoice should contain? Subject to Rule 54. Rule 54 is in special cases. A tax invoice, as in section 31, issued by a registered person shall contain following particulars. So there is a long list of details what a tax invoice should contain. Contents of tax invoices given in your Rule 46. Now they have added one content, specific content, telling that a person who has to give a declaration that invoice is not required to be given in accordance with Rule 48 sub Rule 4, which means e-invoicing, he is not giving e-invoicing though his aggregate turnover in preceding financial year right from 1718 is more than the aggregate turnover which is required for e-invoicing. He is trying to tell that, see, my aggregate turnover is more than what is required for e-invoicing. As of now, my aggregate turnover is more than 10 crores in my preceding financial year, right, starting from 1718 or 1819 or 1920 or 2021 or 2122. So it is more than, say, in the present scenario context, it is more than, say, 10 crores. Even then, I am not giving e-invoicing. So I have to give a declaration. What declaration? I or we hereby declare that our aggregate turnover in preceding financial year from 1718 onwards is more than the aggregate turnover for e-invoicing. It is more. We accept that our aggregate turnover is more than what is required for e-invoicing, but still we are not required to prepare e-invoice. Now you may be confused when a particular person will give this declaration. So if you see the note, you will find out there are certain categories of persons, though your aggregate turnover is more than what is required for e-invoicing, you are not required, you are exempted from e-invoicing in certain cases. Exempted from e-invoicing. For example, banks, SEZ units, there are a long list. There's a list where you are not required to give multiplex screens, banks, SEZ units. So there's a list where you are exempted from e-invoicing even if your turnover is more than the limit. So if your aggregate turnover is more than the limit which is there in Rule 48 sub Rule 4, which means as of now it was 10 crores in preceding financial year, right, starting from 1780. Even then you are exempted. So basically if you are covered by e-invoicing but exempted, then you have to write this declaration that my aggregate turnover is more than what is required for e-invoicing, right, starting from 1718 till date, but still I am not required to give e-invoicing because of the exemption available. So I have to add a declaration. So this declaration will be there on my tax invoice, so that recipient will understand, the person who is getting the goods or service will understand that okay, his turnover is more than what is required for e-invoicing, but he is not giving me e-invoice because he is covered by exempted category. Maybe he is you're talking about banks, or maybe you're talking about multiplex screens, or maybe you're talking about your SEZ units. They are exempted from e-invoicing. So they have to give this particular declaration, additional content of your tax invoice. So that is another amendment here. Now one more amendment which has come in your document chapters related to your credit note, debit note, section 34. Now there's no time limit for giving debit note, supplementary invoice, you have to pay extra output tax, there's no time limit, but there's a time limit for giving credit note, last date for giving credit note. So previously, what was the last date for giving credit note? It was, you can give credit note not later than September month following the end of the financial year, September of next financial year, or actual date of furnishing of relevant annual return, whichever is earlier. Now that September month has been replaced by November. It is, this amendment is in line with the amendment in the time limit for input tax credit everywhere. September is now replaced by 30th of November. Right? Earlier, last date for giving credit note. Earlier, the last date for issuing credit notes, say for financial year 2022-23, for a particular financial year, earlier, before amendment. Now it is after amendment. Before amendment, it was 30th of September of 2023, 30th September of next financial year, or actual date of annual return of financial year, that financial year 2022-23. Now it is 30th, you can give credit note on or before 30th of November 2023, or actual date of annual return of that financial year 2022-23. So earlier, the last date for raising credit note was 30th September of next financial year, or actual date of annual return of that financial year. Now it is replaced by 30th November. So there's a small difference when you compare with the input tax credit. I can give credit note. I can give credit note on, issue credit note on 30th November 2023, which can be filed, that November return can be filed say on 10th December 2023, or say even 15th December 2023. See, with respect to input tax credit, I should get the credit on or before 30th November on the portal. With respect to input tax credit, I should get that input tax credit on or before 30th November on the portal. Electronic credit ledger should contain the credit on or before 30th November. So it is possible while filing my April month return of next financial year, May month return of next financial year, June, July, August, September, October, and that these returns should be filed on or before 30th of November of next financial year. But as far as credit note is concerned, I have to raise credit note, not on return. I have to raise credit note. That raising of credit note should happen on or before 30th of November. Raising of credit note should have happened on or before 30th of November, and that can be included in my November month's GSTR 1, November 2023 GSTR 1, which can be filed later. So it can be included in November 23 GSTR 1, which can be filed on 10th December or before the due date of November return, or 15th December. So there, for credit, the last date to take the credit on portal was 30th November, which means I cannot take the credit in November month return. It should be maximum October month return filed on or before 30th November. But in credit note, they have said that I should issue credit note before 30th of November. If I issue credit note before 30th of November, I can report it on my return, in my November month return also, not necessarily October month return. In my November month return also I can include it, which I can file on time or after time. So that's a difference, small difference that you need to understand. So that is all about your amendments in document chapter.